Hello everyone, my name is Jalia from Integral Management Systems. Today I'll be explaining the different item cost methods available in Microsoft Dynamics Business Central. Understanding these methods are crucial for accurate inventory valuation and financial reporting. In Business Central, costing methods you choose to determine how the cost of your inventory is calculated and reported. First of all, let's move to inventory setup, the first place where you can configure the costing methods. Here on the general tab, you can see the default costing method. You can set the default costing method for your item cards, but you can always overrule it on the item card as well. Let's move to item card, selecting an item and moving to costs and posting fast tab. On the top, you can see the costing method. The first mainly used costing method is FIFO, first in, first out. This method assumes that the first items you receive into inventory are the first ones to sold or used. It's actually ideal for businesses dealing with perishable goods or products, which means food products mainly that have a shelf life. And let's move to our next costing method, which is LIFO, last in, first out. This method assumes that the last item added to your inventory are the first one to sold or used. Actually, LIFO is less commonly used due to its restrictions in mainly accounting standards, but it can be beneficial in industries where costs are rising rapidly, as it matches the higher recent cost against the current revenues. Next, we have specific. I'll talk about average first before going to the specific. Average cost method calculates the cost of your inventory based on the weighted average of all purchases over a time. This means in each time you receive or purchase new inventory, the system recalculates the average cost. This method smooths out the price fluctuations, making it a good choice for businesses with stable pricing, but frequently inventory purchases. So if you have a lot of purchases and a stable pricing, average cost is a better option to use. So next we'll move to our specific costing method, which is used when you can directly match the cost of an item to its specific sale. This method is actually ideal for businesses dealing with unique or high value items like custom machineries or rare goods. In this method, each item retains its original purchase cost, which is then used when the item is sold. So let's move to our final costing method, the standard cost, which assigns a predetermined cost to your inventory regardless of the actual purchase price. So we can predetermine the cost regardless to the actual purchase price, which is commonly used in the manufacturing field where cost controls and the variance analysis are crucial. I will bring you the difference between the standard cost and the actual cost, which is recorded as a variance, helping you analyze cost efficiency and make the necessary adjustments. Now let's move to item history and the value entries to see how these costs are recorded in our books. If you move towards more right, you can see a column called cost amount actual. This is the actual cost which is recording to our books, and we can drill down through the find entries and selecting the value entry. You can see there are two items recorded in the item ledger entry, and the cost per unit is 1477, and the total amount is the total actual cost amount is 2954, which is the same amount posted to our GL as well. And that's a quick overview of the item costing methods in Microsoft Dynamics Business Central. I hope this video helpful, and please stay tuned for more tips and tutorials. Thank you for watching, and see you in the next video.